Good morning, Bay Area. This is your Bay Area mortgage planner, John Payne, and this is the Rate Watch Now Daily Update Report. Happy Thursday, everyone. Here is a snapshot of the mortgage-backed securities market yesterday. You can see profit taking as predicted when rates were going to go up, more so pricing going up, that we had some investors that were going to take some early profits and run. And that's exactly what's happening, and that's exactly what's continuing to happen this morning amongst the mixed news. Speaking of news, what's going to make rates go up? We have the leading indicators. Now, I'm not very impressed about this leading indicators, and it's not really a market mover. It can predict, or it is a good predictor of recession, but it's often wrong and mistiming. But in any regards, it was up 0.3%. Existing home sales, it's up, but in my opinion, it only had one way to go. After being slammed last month to record lows. Now, I don't want to be negative about good economic news, but I just want to present it to you as traders will be seeing it and how it's going to affect the market. I'm all for good economic news, trust me. Rates go down. We have jobless claims. It was actually up 12,000 claims up to 465,000. We need jobs, and we need jobs in this country fast and very badly. Also, Euro concerns. PMI data shows PMI data out of Europe that's showing that the consensus in the market was for a far more modest decline, and it is actually down 2.4 points. And this also brings in more concerns of Ireland as well. The modest decline number I just mentioned was because Germany was carrying most of the load and is not as bad over there as once predicted, but there's still concerns with Ireland, and that is affecting markets. We will have new home sales coming out tomorrow, but durable goods is going to be the big number. Very important news day tomorrow. This is how the market is reacting so far on the news this morning, and you can see this is just more profit taking. This is how lenders are reacting to the news. You can see 24 lenders have repriced for the worst by 13 basis points. Here's where we are, and this is what it looks like. I thought that we would go up and test these highs yesterday, which we did, and we came back down. We still are at the upper end of this range, and we do have a long way to go to if we decide to fall. Which, with this bag of news, I kind of think we're going to be up in this area. I can't see it going too much. I think people are just going to be in pause mode. Investors will be in pause mode, waiting to see what's going to happen with durable goods. As well as there is a lot of thinking that the Feds are going to go ahead and start pumping money into Treasury bonds as the FOMC news came out yesterday. You can see here, this is the trend line. We still have an upward trend line. I thought we would come back down and test the trend line, which is exactly what we're doing. We actually did that yesterday as well. So again, durable goods coming out tomorrow will be a strong market mover, depending on which way we go. Again, we are at the top, but we could go down to the bottom. Although I'm still bullish long term, because in reality, we don't have a very good economy. I mean, it's not falling off the cliff, but it's not climbing any mountains either. Tomorrow is an important news day, as I said that. Profit taking yesterday was expected. A mixed bag of news today can make the market very volatile, so it's hard to call which way things are going to move. Hopefully yesterday, if for my loan officers out there, you locked some loans that you had to, and you locked in some good pricing for your clients, because yesterday was the day to do it. Market reacted favorably to jobless claims numbers, as it should, but it gave back the jobless claims gains of the housing numbers once jobless claim gains came out. So we had good gains yesterday because of the housing numbers, or rather, we had good gains when jobless claims came out, but the housing numbers just took it all back. And the Euro concerns will drag on traders' mind and could provide a lift for bonds. We'll just have to see. It could see with the mix bag of news out there, it could go either way. And I tend to be bullish, so I think that it's going to be better. And again, tomorrow is a very important news with durable goods coming out. All I have for you this morning, Bay Area. Make it a great Thursday. If you know of anyone that could benefit from my morning updates, please pay it forward. Until tomorrow, Bay Area.